Making a mistake on how you report your rental on your LLC can cost you thousands, tens, uppers of millions of dollars. In this video, I am going to show you how to properly report your rental property on an LLC and what you need to make sure you're documenting. And if you stay to the end, I am going to show you how to write off unlimited rental losses. Before we jump in, I want you to like, comment, and subscribe. Let's get after it. The protection of the LLC. Many of you have formed an LLC because you know that an LLC is a limited liability company. It is going to limit your liability in the event that a tenant does something, someone tries to sue you. You have an LLC that is going to separate you from the actual operating of the rental property. And being in this LLC can be a great idea as long as you are properly doing your paperwork. I work with so many clients that are buying rental properties and they are utilizing their LLCs to operate their rental properties. But the key question is, are they doing it the right way? And if something were really to go awry, would that LLC really protect them? Buying the rental property in the LLC is the best option. Making sure that when you first go buy your rental, you already have your LLC set up. That means that you're going to take title in the name of your LLC. Let's say the name of my LLC is 123 Main Street. Many of you will actually name your LLCs after the property address, which is perfectly okay. I form 123 Main Street, and when I close escrow, the title of the property will be titled into 123 Main Street. That's the best case scenario. The loan is going to be in the name of 123 Main Street. The insurance is going to be in the name of 123 Main Street. And when the tenants pay their rent, they're going to write their rent checks out to the name of the LLC. 123 Main Street. When you have that best case scenario, that is really going to give you the best liability protection. What you will need to make sure of is that you go to your bank and you actually open a bank account under the name of your LLC. You're going to want to make sure that all of your rent checks or Zelle payments, or however you get paid, go directly into the bank account of the LLC. That's very important. You're going to want to make sure that the actual payments for your insurance, the payments for your property taxes, the payments for the mortgage on the rental property come out of the LLC bank account. And if you have any repairs, you're going to want to make sure they come out of the LLC bank account, or you're going to want to set up a debit card or a credit card associated with your LLC so that you can pay all of your business expenses against that card. I say that because you will have a very good record of all of your expenses, a clear record of your income, and reporting that on the tax return of the LLC then becomes very simplistic. Reporting on the tax return will be determined by whether you are a single member LLC or a multi-member LLC. If you are a single member LLC, you're going to report your income and expenses on Schedule E inside of your individual tax return. That's because you're a single member LLC and there's not going to be an additional federal tax filing. So everything will go on rental schedule E1. You're going to report the income on the gross rental line, and you will report all the expenses according to the categories on the form that you're going to utilize. When you are a multi-member LLC, you're going to need to file Form 1065, and you're going to report your rentals on Form 8825. That's a different form than Schedule E. The 8825 form is the form that goes inside of the tax return for the 1065 that allows you to report the gross income from the rents and all the associated expenses. Understanding where to properly report the income and expenses is really important. Do not report it on Schedule C when you're operating residential rentals. Now, if you're doing something with Airbnb, that's a completely different subject matter. But when you're doing traditional long-term rentals where tenants are in a lease for 6 months or more, you want to make sure that in a single member LLC, it goes on Schedule E1, and a multi-member LLC, Form 1065 on Form 8825. Taking title in your individual name and operating the LLC is a completely different avenue. Remember, we talked about actually taking title in the name of the LLC, but in a lot of times, it's not practical to do that. You're just starting out. The bank will not lend to your LLC because your LLC does not have a history of credit and you're wanting to get this rental property. What do you do in a case like that? Well, you get the rental property. Never stop progress for perfection. It's not going to be perfect, but it's still doable. What you're going to do in a scenario like that is you're still going to take title in your individual name. You're still going to use your actual LLC to report your rental income and expenses. So that means in this particular case, you're still going to report the rents on the gross receipts line of Schedule E if you are a single member LLC, and Form 8825 if you are a multi-member LLC. But recognize one real important thing. When you get ready to report the mortgage expense, realize that your LLC does not have a mortgage in its name. You have a mortgage in its name. So you do not want to report the mortgage interest on the line that says mortgage interest. You want to report that mortgage interest on the line that says other interest expense. Why do I say that? Because your bank is going to send you a 1098 mortgage interest statement in your Social Security number. That means that when you file your LLC return, it's not going to match what IRS has on record. If you show mortgage interest on your LLC return on the mortgage interest line and your return goes into IRS, you're going to get back a nasty gram because IRS matches up to third-party records when it comes to mortgage interest. So I want to make sure you understand that when you have taken title in your own individual name and that mortgage statement comes under your Social Security number, make certain not to report it on the mortgage interest line of the LLC when the actual property, the actual loan is not in the name of the LLC. You want to avoid receiving that letter. Additionally, you're going to still properly report property taxes, repairs, and everything else on Form 8825 if you're in a multi-member LLC and Schedule E if you're in a single member LLC. You're still going to do that the same exact way. Should you transfer the title to your LLC if you took title in your individual name? Let me give you some information in regards to that. Whenever you are taking out a mortgage loan or a note, meaning you're going to borrow money and you're going to pay the bank back, inside of that note, there's some little fine print that says if you transfer title, the bank has the right to call the loan. Calling the loan means that the bank has the right to say to you, "Hi, Mr. Smith, you transfer title out of your name and you put title in the name of your LLC. We decided you're going to now pay us back the full amount of the loan." Wait, what? You heard me. The bank has the right to do that. So you got to be very careful. My recommendation would be do not transfer that title to the name of your LLC because your bank could call your loan. And what you're doing is you're still going to have the loan in your name, but the title sits in the name of the LLC. Therefore, you have a mismatch. Leave the title in your name until such time you can refinance in the name of your LLC, so both the loan and the title is now in the name of your LLC. That is going to prevent you from potentially getting your loan called, and that is going to prevent you from potentially having an IRS issue where you're deducting mortgage interest against an LLC that doesn't even properly have the title. So making sure you understand that is going to really keep you from getting yourself in a tax slinky. Commingling funds. You want to make sure that if you are operating an LLC, whether it's multi-member, whether it's single member, and whether or not the property is in your name or in the name of the LLC, you want to make sure that you set up a separate bank account and separate the funds from the actual rental property from you. The reason why you want to do this is a multitude of reasons, but one that is extremely important is there's a concept in tax called substance over form, making sure that the substance of the transaction that you are doing follows what you're wanting to do. Meaning, as long as that money is going into a separate bank account that you're using for your LLC, as long as you're paying your expenses out of that bank account, the substance of the transaction shows you are using the LLC to operate your rental property. The form on paper shows the rental property may be in your name, but IRS will look at substance over form. So make sure you do not commingle funds. Make sure you open up a separate bank account. Make sure you are being very diligent about paying your expenses from that bank account or from a credit card or debit card linked to the account that you're operating from. The other reason why you don't want to commingle funds, and I tell you this, I am not an attorney, but I've seen it so many times in practice that when you commingle funds, you are literally piercing the limited liability that you have with your entity. When you operate your entity properly, that's going to give you liability protection. But when you don't operate your entity properly, you can end up losing your liability protection. So it's important that you know that. I told you that if you stay to the end, that I will give you my secret for getting unlimited tax write-offs. If you are the owner of rental real estate and you're getting those big deductions from depreciation and repairs and all of that, you want to take advantage of those deductions. And if your deductions are being limited to $25,000, you should look at becoming a real estate professional. No, I did not say real estate agent. I said real estate professional, completely different from a real estate agent. Real estate professional is in code section 469, and it talks about a person that is a professional real estate investor. And it talks about the time needed and everything that you can do. It's a strategy that you definitely want to look into to help you write off all your real estate losses and lower your overall taxes. You now know how to effectively write off your rental through an LLC, whether you own it outright as an individual or whether your LLC owns it. And like I always say, when you know better, you have to do better. That is why it's time to like, comment, and subscribe so that I can keep you updated on all things tax.